cover the Wyckoff stages both in the weekly and daily time frames, and also the key price levels where Polygon will find support or resistance, and obviously the breakout timing if there are any indications from the chart. So let's start with the weekly chart over here, with Polygon having the third week of narrow range trading, and the price open and closes at a very close price point. And as of this moment, the Wyckoff stage is still at around a lower level where we can consider is still a testing phase within the accumulation cycle. All these orange tags are the accumulation cycle tags over here. So if I zoom out a little, you can see that we are in this current situation after the buying climax back in end of 2024. So the next stage of Wyckoff, it can come lower to a level where the October 10th has reached, meaning the 15 cents key level, that red line over there. We reached that level back in beginning of April before this very gradual uptrend. Okay, so there's still a chance for the price to come down to retest this level or even lower than the red key level. In Wyckoff terminology, we call that a spring. So I believe you understand Polygon has gone through some changes. They changed their call sign from Matic to POL. So that's why we lost some of the history of the charts. But that's where it was back in November 2024. And to where we are now, we are still hoping to see the price to continue with this uptrend, this larger blue box, to show us another sign of strength around the 28 cents yellow key level. That was when in beginning of September, the first sign of weakness happened, and that's also the level where the automatic rally back in early May touched upon. So that's the big picture for Polygon for the time being. Let's quickly check the Bollinger Band and corner squeeze indicator as well. The indicator itself doesn't show the shade, the vertical shade at the back, because the bottom purple line isn't within the orange band yet. However, the top is already within it since beginning of June. For me, I would consider this squeeze has started in July. We are still within that particular squeeze. So if you're new to this indicator, the squeeze means bigger price swings will follow. The magnitude will be bigger than the squeeze period. Sometimes it can be massive, sometimes not as much. So it can be just bigger than the where it got squeezed, but not like crazily high. And also, the swing doesn't start with going up first always. It can start with going down first before it reclines. So be careful when you use the indicator and not to misunderstand it. It's time to get to the daily, and in the daily chart we're seeing something similar where the purple getting into the orange already, and the lower purple line is still waiting. Okay, but in the daily chart things can happen very quickly. In a day or two, if the price continues to trade sideways, the bottom purple can get in the orange. So that happened back in end August, and we see that bigger swing immediately follows after that, this particular kind of plateau period where things are pretty flat, and then we've got that swing. Alright, so that's the Bollinger Band corner squeeze indicator. Back to the daily Wyckoff. So previously we shared this failed backup and last point of support. Like it looks like a bootstrap as well. So this can be considered a sign of strength. I'm just keeping this here to remind us that even if the price broke out to a key level, above a key level, be mindful there are always traps around. Okay, so here we're definitely waiting to see if a spring would happen, meaning a lower point than the previous test. Whether you call it a second test or just test, all these are subsequent tests after the selling climax back in March. So 7 months or and a half ago. So would we see a spring at a point around the red line, or like I said, it may be even lower than the red line? Okay, it depends on how bad the news coming out are. We know there are many possibilities. People are basically trading on the news. So if the tariffs or war talks gets better, then obviously the price will go up. But if it remains uncertain, it can be a reason for the price to go down. So really confusing time. And as of the chart pattern itself, last week we said there is a wedge and the price gone to the upside, trying to test this orange key level of 20 cents. The 2 time points that I mentioned in the title of the video are these 2. One, the top edge of this downward channel box, this smaller blue box, with that 20 cents orange key level. And the other is the same ceiling, but then this time is the bottom edge of the bigger upward channel that I mentioned or covered in the beginning in the weekly chart. So these 2 time points, one pointing towards November 4th, the other pointing towards November 11th. So just 1 week apart, this particular area. Okay, if the price currently is trying to stay above the orange key level, if it successfully closes above and trade in the next few days within this little triangle, it will hit the first opportunity or chance to break out of this downward channel. Okay, so it means that it's going to stay within this uptrend that started back in April. Alright, if it doesn't, if it comes back down from that triangle, the fortunate thing is it's still within the bigger box, but then it means it's still continuing with the smaller downtrend. And the risk over here is when it goes and for another week, it may not be the case, right? I mentioned many times the breakout can happen sooner, so it may not take the entire week to reach closer to the 11th. It can go straight down to confirm us now this is the trend. The bigger trend is over, at least for the short term, before the price reclimbs, if it does. Alright, so that's the importance of the November 11th time point after the one on the 4th. Because the 4th is only confirming whether it's going to stay along the bottom edge of the upward channel, or is it going to go higher, breaking outside of this mini downtrend. But both are still within the bigger trend. Okay, but this time point over here is a confirmation whether the bigger trend is going to finish. Alright, so that's the difference between the two. And if it's really coming down, that's when we have the opportunity to see the spring. A couple of other altcoins have shown us their spring already, but not Polygon. Alright, so you can consider that it's close enough to be called a spring. But the candle doesn't close at the level lower than the selling climax. So whether that dip, you consider that as a squeeze, not a squeeze, sorry, a spring. I won't, but some people may. Okay, so remember, it's still within the accumulation with almost equal chance, meaning that Polygon may trade sideways for like a couple of weeks before it actually shows some kind of direction change. So thanks for joining me. See you in the next session.